Today is Sunday, August 3rd, 2014. I am Arizona Trader, and this is the weekly review for the week ending August 1st, 2014. It was a pretty tough week across the board. All the major indices got hit over 2%. The Dow Jones, the S&P 500, and the Russell 2000 small caps were down closer to 3%. The Nasdaq was the best performer, closing down slightly below 2%. For the year, the Dow Jones was essentially flat. The Russell 2000 small caps were hard hit, and the S&P 500 and the Nasdaq were the places to be. So let's go ahead and take a look at a market overview, then drill down to individual sectors and try to identify some specific stocks that might be playable this week. So here's a chart showing the major averages, and we can take a look at see what happened over the past week. We can see all of them got hit across the board, and the Nasdaq being the best performer. If we take a look at what happened last month, again, the Nasdaq and the S&P best performers, and the Russell was still the place to avoid. And avoiding the Russell was the theme for the year, because even on a year-to-date basis, it was down over 4% compared to the rest of the averages. Over the last quarter, again, the Russell down, and the S&P 500 and the Nasdaq leaders. So this is the same chart, but I included the financials, the semiconductors, gold, and real estate, just to compare to the major indices. And we can see that the semiconductors and real estate outperformed the major indices on based on last week. For the past quarter, definitely the semiconductors were the leaders, followed by the Nasdaq. If we take a look on a year-to-date basis, technology is not quite there. I'm sorry, that's real estate. Real estate and the semiconductors were the leaders compared to the major indices. And if we take a look at individual sectors within the spiders, via the sector spiders, we can take a look and see what happened over the past week. All of them got hit, of course, but healthcare and technology were by far the best performers compared to the rest. Same goes last month. Again, it was technology and healthcare. The past quarter, technology and healthcare again. 6 months, technology and healthcare still in the top half. And on a year-to-date basis, again, technology and healthcare. Again, healthcare is probably due to the biotech bull market, and technology. We've got companies like Apple and Facebook and LinkedIn and other social media websites. Those stocks seem to be doing somewhat better than the rest of the averages. So we can see from that previous chart that small caps were the poorest performers, and that probably indicates a lack of risk appetite among traders. And technology and healthcare were the leading sectors and should have been the place to invest for most of the year. So let's take a look at some individual charts and see what's going on. Since we just closed out the month, let's go ahead and take a look at the monthly chart of the S&P 500, and we can see it's still in a pretty strong uptrend since our correction back in 2009. That hasn't been violated. It's still chugging along. Now on the weekly chart, we did come down and break the 50-day moving average. I did do a Fibonacci retracement, and we are approaching the 50% retracement here. And I wouldn't be surprised Monday or Tuesday if we move down and then reverse around the 50% mark, and then either continue the uptrend or continue further down. Now if we take a look at the daily chart of the SPY, we can take a look and see exactly where we are. Here we are breaking down the 50-day moving average, and here is a little doji being formed on the daily chart on pretty high volume. That doji most people would associate with a trend reversal, but it just means that there's a lot of indecision in the market whether or not they want to take it up or they want to continue going down. It's hard to tell. The path of least resistance right now is kind of undecided, and again, we could see another day down and then reverse and then move back up like we had in the past over here and over here. Let's go ahead and take a look at the NASDAQ. On the NASDAQ, again, same thing as the S&P 500. We're still in a pretty solid long-term uptrend on the monthly chart. On the weekly chart, I did another Fibonacci retracement, and we are approaching the 38% retracement on the fibs, and down here is the 50%, which is coming up to the 40-week moving average, the 200-day moving average. So again, I wouldn't be surprised if we move down for another day or two and then do a reversal and then move back up, if the intention is to go back up. Now on the daily chart, we can take a look and see what's going on. Again, on the daily chart, the NASDAQ did close down below the 50-day moving average, again forming a doji. And this time it's around the 23% retracement. I'm not a Fibonacci person, but they do seem to work very well after a long-term trend like this. We are approaching 38% here again. We might pop down here and then continue back up. Now the Russell 2000 is the interesting one. I had tweeted earlier using the IWM. On the monthly chart, let's see, it was July 31st, I had tweeted that we were forming a dark cloud cover which almost fully engulfs the previous month. Now, if that works out, then we should see a trend reversal down. And that pretty much happened. It's almost close to being a bullish engulfing candle, or a bearish engulfing candle as well. Let's see. Now on the weekly chart, let's move that to the weekly chart, and we can see that not just a dark cloud cover on the monthly, but we've got what looks like to be possibly a double top in place here, or a head shoulder being formed here, in which case the likely scenario is down, which would be the path of least resistance. If we take a look at the daily chart, we can see this long downtrend and opportunities to swing, but not really make a whole lot of money. You'd have to be in and out in a day or two to make any money if you wanted to try and play this. I am chomping at the bit to get into TNA, which is a 3 times leveraged ETF that represents the IWM. But now is not the time. You can also take a look at momentum has also left the small caps. So the way I see it, the S&P 500 and NASDAQ are pretty okay. We could see another day or two down and then move back up. The Russell 2000 small caps are not the place to be. IBD is still calling the uptrend under pressure. There's quite a few distribution days on the S&P 500 and the NASDAQ, so I'm not likely to purchase any stocks for any long-term trends. I might do a day or two swing, but that's only if I find any quality setups, and right now the setups just aren't there. But I did manage to pull a few stocks from my universe list that have some potential to move, depending on which way the major indices move. F5 networks, if we take a look at the weekly chart first, we can see it's pretty much stuck in this area right here and may decide to move one way or another depending on the major averages. Again, if we take a look at the moving averages here, it did break below the 50-day, but then bounced and reversed back up. Momentum didn't completely leave, and that bounce was on pretty low volume, so it could have been a shakeout before we move higher. This one is an energy name. Energy was a hot sector for most of the year, so I wouldn't be surprised if this one makes a new run. It is pulling back from a high and may may begin a new uptrend if we break this downtrend. Everything has been on low volume, so I'd like to see volume pick up before I go into this one. Celgene's a classic biotech. Again, the healthcare sector was a hot one for the most of the year. It's been downtrending a little bit, again on low volume, and momentum is kind of undecided on which way it wants to go. So this is one to watch just in case it does decide to move. And it's only about about 2 to 3% away from the 50-day moving average. So technical support is pretty close by. Here's a good one. It is in the industrial sectors. The WAB. It is forming a downtrend here. A little pullback from the high. Momentum has left. The accumulation days have been on higher volume than the distribution days, so it did break below the 50-day moving average, but it did put in a hammer type candle, so it might actually start to move here pretty soon despite the major indices. Old Dominion, again, this one is in the industrials sector. Momentum hasn't completely left. It actually bounced from negative territory up into positive territory. Accumulation days and high volume. So it did bounce off of this support level and started moving up, breaking past the 50-day moving average, which is a good sign. I just need to make a point to identify when its earnings are being reported. Another industrial, Canadian Pacific Railway, again forming a downtrend here on low volume, except this particular day, which I think everyone got hit pretty hard. So it's just one to keep an eye on, just in case it does break through. CDW is part of the technology sector. Again, another downtrend, pulling back from a recent high, all on low volume, and momentum is kind of undecided on which way it wants to go. So definitely one to keep an eye on. EOG reports earnings next week. I had my eye on this one for a while. It is a big cap stock, so it doesn't move a whole lot, but if nothing else is moving in the Russell small cap, then you might as well put something into the big caps. The last couple of days were on pretty high volume sell-off. It did break down below the 50-day. It is forming a bit of a doji here, so it might actually just come down and then start moving its way back up towards the 50-day moving average. By the time we hit the earnings release, it may just pop from there. Silka again, another pullback off highs. Momentum is gone, but the pullback has been on lower and lower volume, so I like that aspect of it. I'll just keep that there and take a look at it later. This one is from the financial services sector, which has been a poor performer all year. It still has a chance, but I probably won't be doing much with it. Just see earnings is coming up, and it is a poor sector. Save is an oldie but a goodie. Again, forming a little pullback off of highs, approaching the 50-day moving average. Every volume has been anemic with this one. We're going to see when they report earnings. Momentum is essentially gone, but we can see it's been trending down on this indecision point here. So we'll take a look and see what happens with Save over the next couple of days. Kihu was hard to play. It is still in a long channel uptrend here, and it may be just bouncing, finding support around this lower trend line, and then may just start to move back up. So we need to be ready to get into this one. Fleet Core, yeah, this one I haven't been able to get into this one. I haven't been paying attention to this one much, so I probably won't be playing. This is the industrials as well. ACT is the biotech sector, healthcare. Again, this is one of the top performing sectors for the year. Again, it's been consolidating slowly, again on low volume. Momentum is on the verge of turning up, so this candle was a pretty good indication that people are still interested, and it may continue higher, so this is definitely one to keep a close eye on. And again, pullback off highs, low volume, low momentum, one to